Where do you fall? How does it compare to retailers, and do you think it's something that'll continue to push the stock higher?
We're very positive on Amazon stock. The stock's underperformed the bricks this year. Target, Costco, a number of other names have outperformed. We like it. The stock's lagged because of the investments in one day. And as Deirdre just pointed out, that one-day investment is really paying off. The selection and speed is way beyond anyone else in terms of the merchandise available. When we ran our analysis this week, we continued to see just the selection be way beyond. So one day isn't built equal, and we think Amazon is way ahead of the pack with over 10 million items. They're going to continue to push that on a global basis. And the other retailers don't have things like Prime and AWS, which are very high margin businesses that can offset the moves that they're making in very low profit retail businesses. So we still like the story here.
Ed, we know one-day shipping certainly requires quite a bit of spending, and it's something that Amazon has come in at greater than expected costs in recent quarters than it had anticipated. How much of a threat, how much of a worry is that when it comes to the margin story for the company this holiday season?
We're pretty convinced that margins will be fairly controlled. You know, Amazon was more clear, I think, in the last conference call about the incremental spend due to one-day ship. Obviously, when they started one-day ship, there was some incremental costs, from the beginning, but we think they've moderated some of that. So clearly, it will pressure margins to some extent, but we think it's much more quantifiable this quarter than it was in previous quarters.
Ed, in your notes, you talk about an e-commerce arms race that's allowing consumers to, price shop and compare online. Does it make a difference that we're seeing, some of these deals take place over the course of November as opposed to one day? You would think that it would be easier to price compare over the course of a month than it would be if it's kind of more condensed in one day. Is that going to be a problem for these e-commerce retailers?
We've certainly seen a distribution of deals. Many of what we consider Black Friday deals were occurring 2 weeks ago. We saw many of them start yesterday, and so it does make price comparison a little bit more difficult. I'd also add that retailers are being very cautious given the 6 fewer shopping days this year than last year, and I think that's part of why they're starting some of these promotions a little bit earlier than in years past.
Paul, I want to shift gears to the reports that are out from the likes of Wall Street Journal and New York Times as well about the FTC cracking down on fake reviews on Amazon and some of these other sites as well. How big of a risk is that here for investors to be aware of?
I think it's a pretty big risk over time, not necessarily with Amazon, more so with the digital advertising dominated companies like Facebook and Google. And I don't necessarily think it's those companies' faults. We're still fairly embryonic historically in the emergence of the internet and the internet models, and we'll have to figure it out, probably with some assistance from the government to at least put guardrails as to what we can do with our customers' privacy. But yes, over time it's going to be a headwind, not only because of the perception, but also the cost of complying with whatever rules they come up with.
So, Brent, Amazon versus the other names in your coverage universe right now, especially when we've had some big cap tech names that are up double digits versus some of the small and mid cap names that have sold off, especially in recent weeks. Where do you find the most value? What do you like the most right now?
We're still favorable on large cap internet. Facebook and Google are still cheap in our opinion. We still think Facebook's going to $250 a share. Remember, the rise of social commerce is going to be a big tailwind. I went on Instagram this morning and found a men's shirt 50% off and bought it in 2 seconds. So Facebook is a direct beneficiary to what's happening in shopping. Google, we think, is also cheap. Stock has actually performed very well. As we said, in odd years, Google tends to outperform, so it's had an outperforming year again. In large cap software, we still think Adobe and Salesforce.com are tied really well into the whole commerce theme. Salesforce talked about this headless commerce opportunity where it doesn't matter where the shopper comes in, they want to fulfill the back end. So Salesforce and Adobe are going to benefit from everything we're talking about around the retail season.
Paul, similar question to you, but starting off with Amazon, it's well off those lows we saw last December when the stock cratered. But it is underperforming versus the S&P and obviously many of sort of the names that we typically associate with it in big tech. Do you see a good year ahead for the stock?
I actually do. Among the FANGs, and then if you peel back the onion, among the e-commerce plays, I think Amazon at about a $1,700 per share base is very attractive. I expect it to outperform the others in 2020. Though I would, in e-commerce, create a strategy where you would have on one end of the barbell the tightened Amazon and the other end of the barbell Shopify. I think Shopify is very interesting in the space.
Why?
Just because they have an opportunity where very few companies have over time to take some market share from Amazon. Of course, it is all on the come, but so far they've been showing some nice traction. When I take a look at my tech-oriented fund beyond those two in e-commerce, I actually most prefer the semiconductor names over almost anything. And my favorite ideas there are Micron Technology and Applied Materials.